So this set of slides is about contemporary issues for asset managers from an institutional perspective. So we're going to be talking about a few different topics, and the first one is governance. So governance is about oversight of the asset management company, and there has been an increased focus on governance and a heightened fiduciary expectation, which is conforming to regulation. There is certainly a tightened regulatory framework post-GFC, and the volatile markets of the past dozen years have also had an impact on asset management governance, with risk management programs and controls and conduct of companies subject to increased scrutiny by shareholders, policymakers, regulators, investors, and other stakeholders. There is pressure for enhanced transparency and disclosure, increased executive and director accountability, and a greater voice for shareholders and other stakeholders in decision-making. So the industry is rethinking its traditional organisational and governance models, with greater involvement and oversight by executives and directors, especially board audit committees. In particular, many directors are increasing their level of expertise and are reconsidering the depth and breadth of their oversight in a range of issues. Next, we're going to talk about navigating risk complexity. So, the financial crisis and its aftermath caused a deep reflection within the asset management industry on the effectiveness of risk management. Economic uncertainty and the resulting correlation and convergence of risk factors such as credit, market liquidity, and valuation risks during periods of heightened market volatility and stress have underscored the need for a more proactive and adaptive approach to risk management. In addition to the economic risks, there are tax risks, which asset managers are recognizing the need to be a part of their risk management function. No longer is tax simply an adjunct function to a firm's day-to-day operations. Instead, it is becoming a fully integrated part of the firm's risk management function. External forces are also driving change, with the bar being raised significantly in terms of expectations around sound risk management and governance practices for both traditional and alternative asset managers. An increasingly complex regulatory climate has significantly heightened demands for risk oversight, transparency, and accountability. Investors also expect institutional quality governance, processes and controls from their asset managers and are seeking greater transparency and disclosures around the firm's risk management policies than they ever have before. There are also some recent high-profile cases that have involved operational errors, allegations of fraud, rogue trading, insider trading, and improper use of information or disclosure. These investigations and enforcement actions threaten severe reputational damage to firms that fail to manage their operations through rigorous risk and control programs. Each of these trends is likely to continue for the foreseeable future, increasing the complexity and interconnectedness of risk. The confluence of these factors is compelling asset managers to formalize and improve their risk management process with the enhanced risk oversight, transparency, and accountability. And delivering cost-effective technology and operations. So, the operations function has always been a highly complex yet essential part of the asset management industry. Even while asset managers are responding to a changing regulatory regime and increased oversight, they are also experiencing an increase in transaction volumes and complexity, placing stress on their front, middle, and back. Market volatility and pressure on fees also have concentrated the attention of asset managers on their operational processes as a way to control costs. In order to streamline processing and increase profitability, asset managers are focusing on technology and operations enhancements to drive efficiencies. These have become increasingly important given the continued trend towards profit margin erosion and rising expenses. And pursuing growth. So economic uncertainty, low interest rates, and continued market volatility are affecting investor attitudes, the search for opportunities by asset managers, and managers' relationships with advisors, brokers, and other intermediaries. Investors are seeking not only higher returns in a low-yield environment, but also more customized solutions to their investment needs. They also are insisting on greater transparency in all of their interactions with managers and intermediaries, including such matters as performance, expenses, and risk. Responding to each of these needs complicates operations and adds to management costs. Asset management companies are closely scrutinizing their business and trying to determine how to restructure in order to strengthen their market proposition and increase their revenues and earnings. They need to have the infrastructure and processes in place to support growth initiatives, including robust information technology networks, current operation models and platforms, and accurate and timely management operating systems.